You're looking at a daily chart of the Emini S&P on Monday the 14th of April. Had a good old shakeout lately, which was pretty much as expected. Last week we were selling up at the 1868 Fibonacci resistance level. That worked really nicely as we collapsed through the 100-day moving average. A bit further than expected, to be fair. So far we've bottomed at 1803. I think we can continue lower. We are oversold, but I think there's still some room on the downside to test this trend line and Fibonacci support at 1796, 1793. We've also got a bit of a trend line here going back. I think that's a 6-month trend line. Scrunch up and just check this. This trend line goes back to, there we go, the 26th of June. So yeah, that's more like a 10-month trend line. So yeah, big support there. That's down at 11. That's down at 1789, 1798. So what I'm thinking is we're going to test this 1796, 1794 support. That could hold, and we could see a decent bounce off there. But if we go lower, I would have thought we'd hold 1789, 1788, only a close below there. Then I'd have to change my mind and say we're going to go significantly lower, which I think we will do eventually. But before we do that, I think we're going to unwind this oversold situation on the daily stochastic, head higher, probably have a really sharp bounce higher. Could get back up into the 1850s, I would say, but I'm not going to start looking at that until I'm sure we've made a bottom, which I don't think we have at the moment, as I say. Short-term Fibonacci support at 1793, so that's why I'm looking at that 1793, 1796 area. And as I say, unless we close below that uptrend line at that 10-month uptrend line at 1788, then I think we're going to see a decent bounce, probably back up to the mid 1850s, but we'll look at that later in the week.